Hey, good morning. Happy Tuesday, December 18th. Hope that you're doing well. This is Nathan Garcia, and I just wanted to make sure that you're prepared for the anniversary of tomorrow, which is when 1 year ago, Bitcoin hit $19,611 in value. Today's December 18th, 2018. Bitcoin's trading at about $3,600 per coin. So we've seen a 82% drop in the cost of Bitcoin over the past 12 months. Now, Nathan, I can't invest in Bitcoin. Why are you even bringing this up? Because it's a great example of how markets work. Whatever goes up is going to come back down. The reversion to the mean has proven time and time again to be the way that the market behaves. And so if you were watching the market yesterday, you may have saw that the Dow, the NASDAQ, the S&P 500, all of them were down pretty significantly. Some of them were down about 2%. You had companies like Amazon that was down 4.5%. And why is that significant? You've seen all month that the market's been dropping. What was so special about yesterday? Well, yesterday we breached in the NASDAQ and the New York Stock Exchange. You breached the low point in the market that was previously set in February of this year. So that signifies that the market doesn't believe that that is a line of support anymore. What does that mean? It means that investors are starting to change their allocation. They don't believe that there's as much forward potential right now in stocks as there are in other asset classes. And that's why you've seen a rotation into bonds. That's why you're seeing the bond yields come down, because there's greater demand right now. And I bring this all up in context because of the situation that we're in. A lot of people want to trade daily on whatever the headlines are. They want to manage their portfolios based on whatever news story is out today and that's hot today. But in reality, you have to have a longer term vision of what your investment portfolio is used for. And the clearest way that you can get an understanding of the value there is to look at your financial plan. When you look at your financial plan and you have an understanding of what investment returns you need for 3, 5, 10, 20, 30 years in retirement, it gets a lot easier to stomach 2% losses, because that 2% today isn't going to impact you likely in a month. It's not going to have any change on your lifestyle going forward too much when you look at it from a frame of 2, 5, 10, 30 years. And so I want to bring this up as a reminder to you, is that a lot of sensational headlines are out there that can compel you to react emotionally to different things. But I can tell you that I had more calls about buying Bitcoin in February to August of last year than I ever had before. And it was those same folks who bought it right when it was going up, right around $15,000, $16,000, that have held on to it until it dropped maybe to $12,000, and now they got out of it. Okay, so they missed the upside, they missed the downside, and in reality, maybe some of them probably shouldn't have been invested in it at all. But what may have been more helpful is if they were invested in it, that it's a small enough position where it doesn't matter what it does on an annual basis. It's more of a opportunity for a longer term basis, for a 3, 5, 7, 10-year play. And when you look at your investments from that lens, it's going to give you a little bit more certainty. It's going to give you more peace of mind, so you don't care about what Trump tweets or what's going on with the Federal Reserve or any fluctuations in the daily economy. So I hope that you found this helpful. If you did, my big takeaway is to make sure that you review your investment portfolio, that it's aligned with your financial plan. And if you have any questions about that, make sure that you reach out and give me a call. Thanks a lot. Bye.